In this video, I'm going to show you guys how I analyze a stock chart. So it's going to be just basic technical analysis. I use it for when I'm either day trading or I'm swing trading. You could use this for investing. Obviously, dollar cost averaging for investing is also a great method. But if you want to be a little risky, speculate, it's up to you guys. Obviously, I'm not a financial advisor, so take this with a grain of salt. This is just how I do things. So if you guys like this content, make sure to follow me, hit the like button, but let's get right into it. So I'm always going to look at the weekly chart first. Let's say if I'm day trading. If I'm swing trading, I'm going to be taking trades off a weekly, daily level or chart. But if I'm, or even an hourly 4-hour chart per se. But if I'm day trading, I'm going to be looking at the weekly chart to create my bias, the weekly, the daily, the 4-hour. So for example, what is my bias of late in the current market? We've been just trading sideways, very range bound. I mean, since August of last year, since September of last year, past couple of months, so past 6-7 months, we've been just really trading sideways in my opinion. There's little spurts of up and down, obviously. There's certain moves to catch. But as you guys can see, I marked it out right here. Just really trading in a box. If I break it down in the daily, I go from the weekly, then I'm going to go to the daily. Early in the morning, let's say hour before market opens, I'm be looking, trying to see, okay, what's my bias on the day? What trades am I looking for today so I could be on the right side of a trade? Then I'm going to go to the daily. Once I'm on the daily, as you guys can see, what happens? We're trading in this very, very tight range. Look at this range. Look how tight this range is. That's all we've been trading in. To me, I know once we break whatever range, it's going to be hard because once it breaks, it breaks. Sometimes you miss that move, but there's always the continuation day. So we're trading in this very tight range. If you're in this tight range, you know that when we break to the upside or to the downside, there's probably going to be some continuation. So for example, I just want to explain this so you guys can understand better. Look at how we traded in this very tight range. Very similar. How many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 days in this range. Us, it's been, man, almost a month in this range. So this move, there were 16 candles from here to here. There were 16 candles, 16 days, 16 trading days. And in those 16 trading days, there were 11 green days. Obviously, we broke to the upside, so we're bullish. 11 green days. To me, what does that mean? I know I can create a good bias. I create a bullish bias. And I know I have a higher chance of being right on the day because I know I'm going to be trading with the trend most likely. Obviously, there are some down days. This method is not foolproof, but it just helps me because I know, hey, if I could be on the right side of trend, I know even if I might be wrong, I know that trend is on my side compared to if I'm going short on these days against trend. I know I have to be perfect on my entries and exits or I'm most likely going to get stopped out. Well, if I'm going long, if I'm bullish on these days right here, I'll mark it out just so you guys can see from here to here. I know that I can be wrong a lot of times and I'll probably get away with it because we're bullish. So what? Those dips are most likely going to be bought a lot of the times during the day because look at all these days that were strong green days. So that's kind of how I break it down. Obviously, I start on the higher time frame and then I go lower. So what I'm doing is once I get out of here, I'm going to go to the 4-hour. Let me clear this out. I'm going to go to the 4-hour. I'm going to see what does price action look on here. Obviously, same exact thing, just consolidating. So I know, hey, if we break lower, we break higher, whatever it may be, I know that, hey, once we break out of this box, I want to follow that trend. And then I just break it down in hourly. So I'm doing pretty much the same thing. Obviously, we've been consolidating. So it's been the same thing of late. I just know, hey, I got to get in and out of trades really quick. My entries are always, or I primarily try to get them either on the 5 or the 15. Sometimes I'll go all the way down to the 1. I don't like going down to the 1 as much because there's a lot more noise. My win rate's not as good on there. My risk to reward is not as good on a 5, 15. That's really my sweet spot. I feel like I take my best trades there. I'm more confident to hold my trades, not really scalp them. But I'll break that down in later videos. Make sure you guys subscribe if you guys like this content.